Getting a mortgage approved in principle is generally the first step you take before making a formal mortgage application, and is usually the thing that you do before putting an offer in to buy a property. The lender will formally assess you as a borrower. They'll give you a decline or an approval, and then if you're approved, they'll give you an idea of how much that you can borrow with them. Main considerations for lenders approving you: credit score, credit history, so they'll look at your credit report, what's on there for late payments, defaults, CCJs, any bankruptcies, etc. And check that they're within policy. They'll look at your income as well, because you put that on the application. So is it acceptable? How long have you been in your job? Is the type of income something that they're happy with? And then also affordability. So if they're happy with your income, how much are they willing to lend based on what you can afford? Every lender is different in what they do and don't accept, and the amount that they'll lend to you as well. So where some might offer 3 times your income, let's say you earn 50 grand, they go up to 150,000. So others can go over 5 times income, so maybe 250. And there's a massive range on what's affordable, depending on which lender you go to. So it's important that you make your application to the right one. The main thing to remember though is if you decline, don't panic. There's so many lenders out there that perhaps one lender's declined you for one reason that various other lenders would be happy with. So make sure that you go to an expert who knows what they're talking about and can give you the right advice. An important thing to note about agreement in principles also is that it's not a guarantee to lend. So if it's a snapshot in time, based at that point, if you had made an application, then they would accept you as a borrower. They also need to check the property's okay. They need to check that the verification of your income, of your deposit and everything else is acceptable, which would only happen at full application. So whilst it gives a good indication of the approval that they'll lend to you, it isn't a guarantee. Also, if anything changes, whilst people will generally consider an agreement in principle lasting for 3 months, if anything changes in that time, it's null and void. It doesn't count. It's not essentially locked in, and then you can have really bad credit afterwards and still get approved. It's a live thing that at full application and afterwards, even before offer, even before completion, if something changes, lenders can pull their approval. Process relatively simple. When you know what you're doing, it's straightforward. It's just making sure that you're matched with the right lender first time, so you're going to get that approval. And that's why it's so important to speak to an expert who knows what the lenders do and don't accept before making those applications. So you're going to get an approval that actually means something. If you want to go ahead with that, then obviously make an inquiry. One of the experts will pass you to will be able to sort it for you.